Good evening, everyone. I'm your MC for tonight. Today, our webinar is Quarter 3 Crude Oil Outlook, Geopolitics, Price Risk, and Trading Opportunities. Before I start, I just wish to have a quick check. If you all could hear me clearly and see my slides, do help me a favor, type 1 in the chat box. The chat box is on your top right corner. Can you all hear me and see my slides? All right, thank you. Before I start the session as well, just a reminder that throughout the session later, if you all have any questions throughout the session, you may type your question on the top right corner. All right, so now let me start our session tonight. Here is a little disclaimer for all of you. Whatever we share tonight is just for general information purpose. And all the information is for education purpose as well. It does not constitute to any recommendation to buy or sell any investment products. Here is a little background about our company, Phillip Capital Sdn Bhd. Phillip Capital Sdn Bhd incorporated on 7 October 1995. It is wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd. Formerly, before that, our company named as Phillip Futures Sdn Bhd. It is trading participant of Bursa Malaysia Derivatives Berhad, participating organization of Bursa Malaysia Securities Berhad, and also the holder of Capital Market Services License, CMSL. Phillip Capital, for those if you don't know, basically we have 11 Phillip investor centers across whole Malaysia, and our headquarters is at Kuala Lumpur. So Sarawak we have Sibu and Kuching, and then KK we only got one branch, which is Kota Kinabalu. Phillip Capital, we managed to get some awards from Bursa Malaysia. We are #1 Malaysia's top broker. We get champion for best retail derivatives trading participant, and we get first runner-up for best institutional derivatives trading participant. We also get second runner-up for best overall derivatives trading participant. For your information, Phillip Capital is a multinational company. So basically, we have 15 offices around the globe, and our headquarters is in Singapore. So we have few offices across Asia, Europe, such as China, Japan, US, UK, and so on. Due to our multinational company status, we able to provide global coverage for all of you. You all able to trade CME, Chicago Exchange, New York Exchange, and also UK, Singapore, Malaysia Exchange as well, Bursa market. All right. Phillip Capital, we are one-stop solution for your trading as well. Why? Because we offer 3 products basically. First, futures. For futures, we provide index futures, agricultural futures, metal futures, energy futures, and cryptocurrency futures. For stock, as I mentioned just now, because we're able to provide global coverage, so we are able to trade Malaysia, US, Hong Kong, Singapore, and Australia shares with us. Same as contract for difference. We cover for Bursa, we also cover for New York Exchange, Nasdaq, and so on. Phillip Capital is your broker of choice. We are award-winning multi-asset broker because we offer 3 products basically: futures, stock, and CFD. That's why we are multi-asset broker, and we're able to provide 24-hour broking and execution support as well. We also provide advisory services, latest market news, wide array of products, and also no platform fees. In Philip Capital, we're able to provide free one-to-one coaching to all of you, regardless it's about our product itself, futures, CFD, stock trading, or the knowledge of the product, or even platform coaching, or even charting system, technical analysis. We also provide winning market calls, one cover for fundamental, which is every Monday 11 a.m. The other one cover for technical analysis, which is every Monday at p.m. If you are interested to join our upcoming seminars and webinars, welcome to scan this QR code for your future seminar and webinar invitation. Next, this is our online account opening. If you are interested to open account with us, do scan this QR code, and do remind that this QR code able to allow all of you to trade for stocks, futures, and CFD. All these three accounts by online account opening. Now, I would like to have a brief introduction about our trading platforms. First, we have Philip Nova. This platform is basically for all of you to trade for futures. We provide multi-assets such as futures, CFDs, and even US stocks in our Philip Nova platform. We do have trading view chart integration. We have market depth. We also have local and foreign products. All the features that a broker should have, we have. For some of you, if you always to have demo account, you can scan the QR code for demo account. Now, this is our live charting system, trading view. For trading view, we are first broker in Malaysia that had integrated trading view to our platform. Basically, for those, if you are familiar with trading view, it will be not an issue for all of you, because all of you can use trading view, to log in into our Philip Nova system. And all the features, the chart, indicators, everything is the same. So we also provide 15 global exchange. We also provide 24 hours broking and execution support for our trading view. Next is our Poems platform. For our stock platform, we able to provide global stock and ETF, advanced charting tool, market depth, so on and so forth. So for this particular Poems platform, it's available for our desktop version, our Google Play, and also App Store. Now is our promotion session. First promotion will be invest in US share and ETF. If some of you here interested in invest in Microsoft, Tesla, this particular US stock, you all are welcome to open account with us for this US share, because right now we are undergo promotion. The promotion rate is as low as 0.02% or minimum USD 3.99. We also provide free US live market data, and most importantly, we don't have any platform fees and custody fees. Next promotion will be our volatility index. If you're interested to trade CBOE, VIS, and VSM, the commission is only USD 3, and we provide free market data. The promotion is from now until 30 September 2026. Of course, if you are interested to know more details, you all may scan the QR code here for your further understanding. Next will be our CME promotion. For CME promotion, if you all subscribe to our CME products and you fund in for 2,000 ringgit initial fund in, first, we're able to provide you with the first trade buffer up to 100 ringgit. On the other hand, we also have tier basis trading credit reward up to 88 ringgit to 288 on this month until 31st of July, which is the end of this month. So if you're interested, please scan the QR code for more info, and also do welcome to approach any Philip Capital staff. Next is our SGS Asian Index Futures. SGS Asian Index Futures, basically, you all can trade for Singapore, China, Taiwan, Japan, Vietnam, and Indonesia Index Futures under SGS Exchange. The commission rate is as low as USD 1.88. This promotion is from now until the end of September, 31st of September 2026. Next, which is our last promotion as well, is our mini KLCI futures promotion. For those interested to trade mini FKLI, the commission rate is as low as 2 ringgit 0.99 commission per lot. And we do have retail trading challenge, which if you rank among top 15 traders, you manage to win cash prizes up to 8,888 ringgit. The promotion is from now until 31st of July. Interested, you all can scan for more info. Next, before I officially pass the floor to our distinguished speaker tonight, let me introduce him. Our speaker tonight is Daniel Ang. He started his career trading commodity futures back in 1985. He went to be a gold dealer in 1989 before joining Standard Chartered in 1992, where he traded mostly US futures as well as FS. He is currently contracted to CME Group as independent speaker for Asia Pacific region as well as Frankfurt-based US. He also author of The Accidental Trader, a book available at major bookstores in both Singapore and Malaysia. Now, let us put our hands together to welcome our speaker of the night, founder and CEO of Traders Academy International PTE Ltd, Daniel Ang.
Thank you very much, Brian. And now before I can continue, let me share my screen. Now, I hope you can see my screen now. Now, the thing is this, we are now at a point in time that is causing a lot of volatility in the markets, in particularly what's happening in the Middle East, which has been very inflationary. So we are not just talking about higher energy prices as a result of the war between the United States, Israel, and Iran, but we are also seeing the impact on inflation on a global scale. So today we're going to spend a bit of time to talk about the geopolitics, as well as to what my views are on energy markets, in particularly the crude oil, and how we can take advantage of this event, which we have no control over. So the question here is, do we want to be a victim, or do we want to take advantage of the volatility presented by the event that we are seeing? Now, before we go into the content itself, let me remind you that this presentation is for informational purposes only and does not constitute an investment advice or recommendation. It is definitely not a suggestion for you to buy or sell any kind of securities, including futures, options, or any kind of leverage products. Do understand that all investments do carry a little bit of risk, so it may not be suitable for all investors. Be aware of your own risk tolerance and suitability before you actually engage the market by buying and selling leverage products like futures and options. Obviously, the presentation I'm going to share with you tonight has not been vetted by the SC. So if you're okay with that, let's continue. Now, this will be the content in which I will be talking about. I'll be telling you what are the factors that's driving energy markets, in particularly what's happening in the Middle East in regards to the war with Iran, and what are the implications now that we have seen the United States and Iran now basically escalating after the MOU that has been signed 2 weeks ago. Okay. And we'll also talk about the best case scenario if somehow they can get themselves back into the negotiating table. If there is going to be a solution, that would be great. However, we also want to know what's the impact of the UAE leaving OPEC. We already knew UAE has already left OPEC, and Iraq has actually threatened to do the same thing. So we will also be looking at that. And of course, the reality that we are facing right now is there is a dwindling global oil inventory shortage, meaning to say that what's in the stockpile, okay, after almost 4 months of this war, is actually at a very dangerous level, whereby every country right now is basically scraping the bottom of the barrel, so to say. And we also want to know, even if peace returned tomorrow, would oil prices be able to reflect the reality? That would be something to consider, because infrastructure, once damaged, will take a long time to get back online. Okay, and of course, the last part of this will be talking about the product offered by CME Group, in particularly the NYMEX Micro WTI crude oil futures and my outlook. Now, without much delay, let's continue. Now, we all knew by now what happened after the US launched their Operation Epic Fury, which is on February 28th. So that was a day in which the United States launched a war together with Israel on Iran. And that happens to be a Saturday. And of course, when the market reopens on the following Monday in Asia, we saw a massive gap up in prices in energy products. And that has been the case. And again, this time, the more recent case is, of course, the breakdown of the MOU. And we can see that, again, it happens over the weekend, and hostility between the United States and Iran has been ongoing even up to this very moment. Okay, so these are the sequence of events that happened with the dates that you can see on the screen here, going all the way to the signing of the MOU on June the 18th. Of course, now there is water under the bridge. We knew that the MOU has basically led to nowhere, because almost immediately after the signing of the MOU, both sides are contesting on what they have agreed. So it's very, very curious why they even bother to sign the MOU, because they don't seem to be agreeing on the things that they agreed. Okay, so this has been a problem for a lot of investors and traders around the world. Okay, here we have the end of the conflict. We can see that the prices of oil has actually moved back down after the knee-jerk reaction to the upside on the first trading day in March. So we can see that there has been an attempt, okay, to try to negotiate a lasting or durable peace between the warring nations. Obviously, right now we know it is not the case right now, okay, because that is the situation leading to the signing of the MOU, okay, which is the Memorandum of Understanding, which is not even an agreement, it's just a memorandum, okay. Here we can see that both sides, after they signed the MOU, they have basically not agreed on what they have agreed. Now, on the left here, we can see the Straits of Hormuz control and transit. They could not agree on what was agreed on the treatment of passage through the Strait of Hormuz. We all know that this is a narrow choke point where most of the oil that's leaving Middle East, whether it's from Saudi Arabia, from Kuwait, from Iraq, from UAE, all has to go through this very, very narrow waterway, which is called the Straits of Hormuz. Now, the US believe that what they signed in the MOU requires Iran to ensure that no vessel will be molested, okay, and there is not going to be any toll that can be imposed unilaterally by Iran. But what Iran understands by signing the MOU as far as the Straits of Hormuz control is concerned, it says that it has the right to charge a fee. So again, this very, very important first case about what is actually agreed on the safe passage of vessels going through the Strait of Hormuz is already problematic. Now you move over to the right, okay? Here we have the $300 billion reconstruction fund. The US contend that Iran will be able to get access to this money to buy only products from the United States, in particularly the grains. However, Iran believe that they are not beholden to buying only US products. They are free to spend the fund as they see fit. So again, there is another point of contest here. Now, at the bottom to the left here, we have the sanction relief and asset unfreezing. Now, with the signing of the MOU, the United States interpret this agreement that this money will be released 60 days after, okay? And it will require Iran to dismantle its nuclear program. Iran look at it very differently. He believes that the US will have to release immediately $25 billion in frozen assets and transfer it to Iran, and also to lift all sanctions. So again, what they have agreed to disagree has been very, very marked in that sense, okay? Then what happened is that there is that issue with Iran, with Israel. When both US and Iran signed the MOU, it was without the involvement of Israel. And we all know Israel is a major part of this war here. And by not including Israel in the negotiation, Israel believed that they are not bounded by this MOU. So almost immediately, where the MOU was signed on June the 18th, the following day, June the 19th, Israel actually attacked Lebanon, because in the MOU, all their property, as far as Iran is concerned, must not be attacked. But within 24 hours, Israel went to attack Lebanon. So as far as Iran is concerned, they believe that the MOU has been breached, and they blame the United States for the breach of Article 1 of the MOU. Now, almost 1 week later, we can see both Israel and Lebanon has been exchanging fire to the point whereby the United States has to bring them to Washington to sit down and agree on a ceasefire. But almost immediately, Israel broke that ceasefire, okay? Then this month, last week, we have July 14, Lebanon and Israel again goes back to the negotiating table in Rome with hope of securing Israeli withdrawal from southern Lebanon. That did not happen, okay? And then less than 5 days later, we can see even up to today, Israel has continued their attacks in southern Lebanon. So this is Israel acting as a spoiler. They do not want this war to end, okay? At least not the US to end the war against Iran. And I think they have basically got what they wanted. So we have a situation with members of OPEC wanting to leave, because the OPEC is basically a cartel whereby all the oil producing nations agree on production quota. UAE believe that they have been shortchanged because they can produce a lot more, but they couldn't. And now they have left the OPEC organization, and now they are free to produce any amount that they want, okay? And they have been producing more than what they were producing before the war with Iran started. So now we have UAE already moving out of OPEC, and although Iraq has not left, but it has already mentioned that they will leave, okay, provided they get to increase production. So every member is trying to increase production. The problem here is that with increased production, they still have a problem of shipping those oil out of the Middle East. And with the Straits of Hormuz now closed, that is a problem. And this morning, there were a lot of reports saying that the Houthis in Yemen has also sanctioned Saudi Arabia, meaning to say that the other end where oil can be shipped out of the Red Sea, okay, has also been closed. So that is going to impact oil prices almost immediately. We saw it on Monday, the first trading day of the week itself. We saw crude oil prices has been trading above $84 per barrel. Okay, so that has been an issue with diminished OPEC, meaning to say everybody wants to sell more because oil prices has actually come off and it's only recently been rebounding. So we have a case here whereby, as far as July is concerned, we can see that the low traded in July, on the first trading day of July, has basically set the bottom for the current run. And since then, oil prices has been going higher, including today. Today is only Tuesday, and we are beginning to see oil prices, as far as WTI is concerned, is already trading above $84 per barrel. And that is a situation we have to deal with. And technically speaking, I do believe that the bottom is already in place, and going into August, which is going to be a very critical month, in my opinion, we are likely to see even more, much higher prices as far as I can see, okay? Here we have the United States basically has been launching one whole week. In fact, the whole of last week from Sunday till this Sunday, we can see that the United States has been bombing Iran non-stop as far as the coastal defense is concerned. So US has stepped out their bombing of Iran for violating the MOU. But the Iranians is seeing it the same way. They believe that US has actually violated the MOU. So as far as we are concerned, the MOU is as dead as it can be. Okay, so we don't talk about ceasefire. We don't talk about a peace plan. The MOU is already up in flame. Okay, so as far as we can see here, military infrastructure, US has been concentrating on hitting Iran's infrastructure, okay, including their air defense system, their coastal radar, the civilian station communication network, and logistic. And not only that, they have also been hitting civilian infrastructure, okay? They have been hitting bridges, railway lines, and worst of all, they have actually hit their desalination plant. We all know Middle East is very short of drinkable drinking water, and a lot of the Middle East nation, including Kuwait, Qatar, Saudi Arabia, has desalination plant. They need to turn seawater into drinking water, and US has actually hit Iran's desalination plant. And Iran being Iran, they have also hit back at their neighbors' desalination plant, in particularly those belonging to Kuwait, because Kuwait is actually very, very near to Iran, and it's also a major military base for US forces. So I think the calculation in Iran is basically to not only hit Kuwait hard. I think there are rumors that maybe they will move ground forces into Kuwait. So if that is going to be the case, this entire fight in the Middle East is no longer going to be confined between the United States, Israel, and Iran. It will go regional. Okay, and we also got news that the US has actually hit Iran nuclear power plant. This is terrible, okay, because once any radiation leaks from any of this power plant, it will not be contained within the borders of one country. It will spread, okay, and Iran has actually hit Israel's nuclear facility as well. So the way this thing is going is definitely going to cause a lot of concern for those who are not involved in the fighting. Okay, so based on what we can see here is an escalation, a heightened escalation that will lead to much more problem going ahead. And how it will impact crude oil, I think it is almost a foregone conclusion. We will see a lot higher prices in crude oil. Okay, so we have Iran respond to the non-stop bombing. Okay, and you can see all the countries listed here. There are 6 countries that are within that region, what we call the Gulf nation. They all have been hit. Okay, and the one that we want to be concerned with is actually the one at the bottom. Okay, Jordan. Now Jordan actually houses a key US military installation, and Iranian has actually flattened that base, including some fatalities as far as US soldiers are concerned. And in response, President Trump has actually continued to hit Iran, and saying that this is in response to the killing of US soldiers in Jordan. So going forward, as you can see, this thing could easily go regional. Okay, so prepare for a lot more adverse news coming out from the Middle East going forward. And then this is a senior advisor to the supreme leader. Okay, and this guy here, Moshe Razaya, is basically saying that instead of just retaliating, I think what he's trying to expound here is to go on the offensive. And if that is going to be the action that Iran is going to take going forward, it will mean that Iran will not be just responding to attacks. They will be taking the initiative and taking the fight, okay, to the United States. So all this is telling us that the situation in the Middle East is a lot more volatile than we are led to believe. Okay, so this is the piece of news that came out last week. Okay, Iran say Houthis is to close the Red Sea oil route. Okay, here there is a place called the Bab al-Mandeb Strait, which is the entrance to the Red Sea. Okay, this we know there is a Straits of Hormuz. There is one controlled by Iran. This one is the Bab al-Mandeb Strait is actually controlled by Yemen, and by Yemen we are always referring to the Houthis. And if they close that strait as well, the other exit route out of the Middle East will effectively be closed unless they move upwards through the Suez Canal. So this will mean there will be less supply coming into the open market. And with less supply, you know what is going to be the consequences in terms of prices for oil. Not only oil, we also have LNG, we also have fertilizers not reaching the open market. And eventually we will see them in shortages of food. We will see them in shortages of helium, for example, which is a major component for the manufacturing of microprocessor. Okay, so all this is going to have knock-on effect. The net effect will be higher inflation all around. Okay, now the other thing we have to concern ourselves with is also the very low inventory. For 4 months, this war has been ongoing. There was a brief period during the MOU in which a lot of people were rushing to stock up on their stockpile. Okay, but the window was only open for less than 48 hours before it shut down because of the breakdown of the MOU. Okay, so worldwide we are seeing every country have very, very low inventory as far as crude oil is concerned. So this will be something that we will have to contend with. This is the demand and supply issue here. Unless oil can freely come out from the Middle East, every country will be rushing to lock in whatever supply they can get their hands on. Okay, and while this is ongoing, we also have a situation in Russia in which Ukraine over the month of June has been very successful in taking out Russia's energy infrastructure, so much so that Russia has now stopped or banned the export of diesel and all the refined products that come out from crude oil, and that will have a net effect on less supply all around. So when we look into the inventory situation, we know that it is bad, really, really bad. Okay, and it's not just in other countries. In the United States, where they are right now the biggest oil and energy supply, especially LNG. Okay, we can see that the US is also very low on supply. In the US, there's this thing called the Strategic Petroleum Reserve, the SPR. It is the lowest since 1983. That's terrible. So if you have very low supply or your inventory, something that you put in stockpile now has been drawn down so much that it's scraping the bottom of the barrel, it shows that not only is the world going to be short of oil, we are going to see the same thing happening as well in the United States. Okay, so just be prepared for higher prices going forward. Now, the damage to infrastructure, earlier on I did mention, if peace for some reason return back miraculously tomorrow, we will not be able to enjoy lower oil prices because it will take a long time to rebuild those infrastructure. Okay, when Qatar shut down their LNG production, the best estimate says that if they should restart, okay, to pump LNG, it will take them at the earliest 6 months to a year to actually restart their production. And we are talking about certain oil fields that has been hit and destroyed. Okay, during the latest run, we can see that Saudi Arabia oil field has been hit. That means to say that this infrastructure need to be repaired and need to be rebuilt, and it will take a long time, sometimes more than a few years, to actually build this very sophisticated infrastructure. So even if peace should return tomorrow, which is not going to be the case, but if it does, we will not be able to enjoy oil prices at much lower levels. Okay, so be prepared for many years of elevated high energy prices. So this will be something that we will definitely have to be concerned with. And then when you look into the AI narrative, everybody is talking about AI going into July, especially with the launch of SpaceX, okay, listing in Nasdaq itself. And we all know everything about AI requires a lot of energy, okay, because when you want to go into building data centers and hyperscaler, you need to build the infrastructure, okay? And with the situation in the Middle East, the way it is happening, definitely that will be a story that we will need to look into again, okay? If you have noticed this past 3 weeks, we can see that tech stock has been at the receiving end of a lot of selling, okay? So this is also in part to as a reaction to the reality that energy is going to be a big problem going forward, okay? Now, the AI story is going to be around. However, what is going to power the data centers and the hyperscaler is still not there yet. They haven't built the infrastructure, okay? So with high energy prices, maybe the AI story would have to be curtailed, okay? Maybe not as gung-ho as what it was just before entering July, okay? Here we have a product here that you can take advantage, knowing what I've just told you, that I do expect elevated oil prices going forward. How are you as a retail investor going to take advantage of this scenario of higher energy prices? Okay, there is a product called a micro WTI crude oil. Now, if you do not know, WTI means the West Texas Intermediate crude oil. Now, there are many grades of crude oil. Okay, we have the North Sea oil, we have the all kind of oil. Okay, and the WTI is a light sweet crude oil with low sulfur. Now, what Malaysia produce, okay, as far as Petronas is concerned, they produce the same grade as the United States, which is the light sweet version of this crude oil. And this light sweet brand, okay, is definitely more is selling at a premium. So United States produce this WTI light sweet crude oil, but internally, domestically, the United States can only process and refine heavy crude. That's the reason why they buy crude oil from Canada, and Donald Trump is basically getting his hands on Venezuela crude oil, and those are the heavy crude. Okay, so the expensive, the premium crude oil, which is the light sweet crude oil, which is in this case a WTI, has been exported, very similar to what Petronas is doing. Whatever you pump, okay, are the light sweet in which Petronas will sell into the open market and then import the heavy crude from the Middle East for refinement. So Malaysia being Malaysia, although you are a oil producers, the high prices in international oil prices is going to come back to haunt Malaysia, because you sell your sweet crude at a premium to the world and buy the lower price heavy crude from Middle East. Right now, supplies are not coming out from the Middle East, so eventually Malaysia will have to contend with much higher oil prices at the pump. Okay, so here we have a product here called the micro WTI. We have a regular crude oil, and that is 1,000 barrels in terms of contract size. Now the micro is basically 1/10 of the standard crude oil contract here, which is 100 barrels. Okay, and of course it's priced in dollars, and the time of trading is actually based on Central Time, beginning from Sunday, which is our Monday at 5. Here you have to convert it back to local times, meaning to say that if you look at the highlighted wordings in red, okay, here is Monday to Saturday, 6 a.m. to 5 a.m. Malaysian time, which correspond to Sunday, 5 p.m. Central Times to Friday, 4 p.m. Okay, so there is a 1 hour break in between, and the minimum price movement is 0.01 cent per barrel, equal to $1. So every month there is a contract available for trading. However, the big difference between the regular standard crude oil, which is the symbol CL, compared to the micro WTI crude oil, which is MCL, is the way this crude oil contract is actually settled. There is a settlement method as far as the regular standard crude oil is concerned. It will end up in delivery. However, the micro WTI crude oil is financially settled. Now, what you want to know is the termination of trading. The regular crude oil, okay, will basically terminates its trading, means it's the last trading day on the 25th of the previous month. Let's say, for example, currently, if you are trading the August contract, meaning to say that this position would have to be settled on 25th of this month, which doesn't give us a lot of time. So if you are looking to trade the micro WTI crude oil, you will have to trade the September contract, okay? And knowing that unless 25th of the month before that is a weekend, then you got to consider 5 days ahead, okay, meaning to say on the 20th of, let's say, August for the last trading day for this micro WTI contract. Now, the maintenance margin here is kept affordable, and there's a reason why this contract has been rolled out, to make sure that retail investors can still afford to participate in this contract. Very affordable, less than $1,000. Okay, so this margin requirement is the maintenance margin, means that you need to have this amount in your trading account for you to carry a position overnight. And of course, this margin is not static. They will be adjusted as the volatility in the market dictates. Sometimes if the market becomes more volatile, the exchange may on short notice decide to raise this margin requirement, okay? And do check with your broker from time to time what is the margin requirement for anything that you trade out of the CME, for example, okay? Here we have the monthly outlook here. Here you can see that monthly refers to a very long-term outlook. Basically, in this monthly outlook here, the market is very bullish. The market at one stage went negative $40.32. Now, if you have memory of COVID, when the WTO designate COVID-19 as a pandemic, that was a day when the market went into negative territory, which is something very unusual, okay? And it actually went negative. Technically, what it meant then was that anybody who sell you crude oil will also have to pay you, okay? So that is an aberration, and that was a low that may not come back again. Okay. Since then, the price of oil has actually risen to $130.50. That was the initial days of the war between Russia and Ukraine. So prices actually surged to $130.50. But that wasn't the high. The high was actually traded during the global financial crisis. Before the global financial crisis, oil prices was $147.27. Now, what you are seeing here, this chart here is actually taken from the regular standard crude oil contract, okay, because the micro crude oil contract do not have such a long history. Okay, so what we can see here, the bottom of this contract here to the right of the chart here, you can see that the low is just below $55 per barrel. And that was just before all hell broke loose in the Middle East. Prices of crude oil rushed all the way to $119.48. And that was the day, on the first trading day of March this year. Remember, Operation Epic Fury started on Saturday, February 28th. So the first trading day in March, prices in Asia surged to $119.48. And since then, it has been coming down until recently. Okay, so we can see at the start of July, market actually stabilized, and now it does looks like it may have already hit a bottom and is getting ready to rally. So by and large, the downtick from $130.50 may have ended at $55. And what we are seeing here is a continuation of that rally from negative $40.32. And if this market rally beyond $147.27, which is the all-time high so far, there's a potential for the market to go to either one of these two levels, $190.36, which is my target. Okay, the other one will be the equality level, meaning to say that the move from a minus $40.32 to $130.50, and then extrapolate from the low at $54.98 should bring us to $225.80. So if this scenario actually pans out, which is very, very possible, okay, then we are looking at oil prices we have never seen before. So based on what I have just mentioned in terms of the fundamentals, there's every possibility we will see those levels in the months ahead, beginning with August. I'm actually looking at August very warily. I'm already long crude oil, and I'm holding on to all my long positions in expectation a new high will be traded in crude oil in the not too distant future. Okay. However, this bullish view will be negated if prices go below $32.74, or at least $33.64 at the bare minimum. Okay, so that being the case, I don't think that will be a likely scenario. I think the prospect of higher prices is more likely than prices of oil going down. Now, if you look into the daily time frame, which is what you are seeing here, the low traded is $67.05, which is at the very beginning of this month. And since then, we can see prices has been rather elevated. Yesterday, Monday, we saw prices of the WTI crude oil. Okay, this one refers to the micro WTI crude oil futures, raising up to $84.62 in Asia. Okay, and if you look at the chart itself, the overall bias of this market is very, very bullish. The market hit an equality from $119.49 all the way to $67.05. The market has unfolded in basically a zigzag pattern, and then it found its footing. It found its footing at $67, and is currently very elevated. Last I checked was $82.44, but the trajectory suggests that unless prices is kept below $89, there is a possibility we will see that level being blown up. If market trades above $90 per barrel and close above that this week or at the end of July, then the condition for much higher prices for an assault above $119.49 is actually very possible. Okay, so by and large, I am definitely going to be looking for levels to buy even more if there's going to be any kind of pullback. Okay, so you can see that is that little observation here. The dominant trend is bullish, and the only time I will be not bullish based on the daily time frame is the prices of crude oil go below $61.40. My target immediately is $155.38. Now, there's a counter trend that is currently in place from a high of $119.49. Okay, and I will be no longer bearish as far as this counter trend is concerned if prices trade above $119.50. The target will be $50.32 if that's going to be the case. But I think it's going to be highly unlikely. I am biased to the upside. As what my chart is telling me, technically speaking, this market favors the upside more than the downside. And considering the fundamental that I've just shared with you, that is going to be a very likely case. So I've shown you the outlook. I've shown you how you can take advantage of this micro WTI crude oil to take advantage of this view. If you are also bullish as I am, then going forward, the direction is very clear. The only question is what level do you get in? Okay, so I do have my levels. I'm already in, but I'm more than happy to add to my position. Okay, so it may not work for you in the same way, but if you concur with my observation, then obviously there is a lot of money that could be made if you get this right, because the war that is happening in the Middle East is not just the Middle East. We also have to contend with what's happening in Europe, because Ukraine has been very successful in taking out Russia's energy infrastructure. In combination with the two wars, okay, let's hope there's no more third undisturbed area in which there's going to be war, okay, just between Europe and the Middle East is enough to basically allow crude oil prices to go up a lot higher than what it is currently trading. Okay, $100 per barrel will be, I think, the norm at the bare minimum. Okay, so with that said, I will be taking questions if you have any. So if you have anything relating to what I've just shown you, I'll be more than happy to take your questions if you have any. We have about maybe 10 minutes left to this event here, and I'll leave the floor to Casey and Brian.
All right. Thank you for our speaker, Daniel. Thanks for this wonderful and insightful sharing. I hope all of you do learn as much as me. So now it's Q&A session. Do you all have any question? If you have any question, do help me to type your question in the question session. It is on your top right corner. Any question from the floor? All right, I did receive one question. So the question is, for your opinion, basically right now since crude oil, since this war haven't ended, so in this particular situation, do we have any possibility in the future that the price of the oil will be dropped back to the normal as before the war, as right now, especially in Malaysia, due to this particular war, our petrol actually the price has been keep rising. Although we have subsidy from the government, however, we don't know when is this subsidy gonna be end, or whether in the future to what extent government no longer able to provide subsidy to us. What is your opinion on this?
Okay, at the beginning of July, or rather the end of June, we saw oil prices go back to pre-war levels, which is about $60 over per barrel. And we saw the low traded this round was $67. So basically, now that the prices is already up almost 40% from that low, the bias, as far as I can see, is maybe we already seen the low. So going forward, are we going to will be able to see oil prices back to $60 per barrel? I think the odds are not very, very good. Okay, Malaysian government has actually cushioned the effect of oil prices by subsidizing, heavily as far as Malaysia is concerned. But I think we will have to come to the realization that this subsidy cannot be sustained over any extended period of time, because if global energy prices are high, it makes no sense to continue to subsidize without burning a hole in the government budget. Okay, so at some point, consumer would also have to share the burden of higher prices, which is the case in Singapore. We have higher electricity bills. We have prices have actually gone up quite a fair bit, okay, in double digit just for this month. So if you ask me whether is there any chance we will see oil prices go back to pre-war levels, I think it's just going to be really hard. It will take a miracle for that to happen. So unless a miracle happens, we are more likely to see much higher prices. Like I say, $100 per barrel crude oil is going to be the norm. Okay, if that's the case, inflation would be here to stay, and it will rub off across the board. And with higher energy prices, we all know that energy is the basis of production. Whether you're running a factory or whether you are running some kind of business, your basic cost is energy cost. So if fossil fuel is going to be the basis of energy, okay, then it will be difficult to bring down inflation because the cost of production has gone up. The big chunk of the cost of production has gone up. So yeah, I am not optimistic that we're going to see prices of crude oil go back to pre-war levels, at least not in the next few months.
All right. Thank you. Hope hope miracle really can happen. Otherwise, with all these living costs, whatsoever, dragging for a long time effect will be a big issue. All right. So we're having one more question from the audience. What is your opinion to predict that the crude oil price can be surged to USD 155, which is even higher than historical Russia-Ukraine war and economic crisis?
All the fundamentals just between US and Iran alone is going to guarantee higher prices because now they are hitting each other infrastructure, and it is very hard, okay, for us to conclude that there will be peace, at least in the near future. If oil cannot leave the Middle East, whether it is through the Straits of Hormuz or whether it is going to be the other straits where Yemen is, it's going to be hard to imagine prices staying at the current level. Based on the escalation in the violence, it is more likely to be the case in which I think oil prices is definitely going to be higher. Now, of course, the good news here is that UAE has ramp up their production. But unless UAE is able to export those oil, it will be for naught, because right now there is another issue about storage. During the last 4 months in which oil were not able to leave the Middle East. Now, if you have studied oil producing nation, they cannot stop pumping because of the nature to be able to keep that pressure on their oil field. They will have to continue to produce. And once they produce, they will usually ship it out. But now we have issue with the closure of the Straits of Hormuz. The oil producing countries has been storing whatever they produce. But there's a limit to how much you can store. You still need to sell. Okay? And unless oil can freely flow again, I don't see supply coming into the open market. Even with UAE now allowed to basically not have a cap on their quotas. Okay, this is very hard. Okay, and then of course you look at how Ukraine has been very successful in taking out Russia's refineries. Okay, and that means less supply will be coming out of Russia as well. So we have less supply coming out from the Middle East. We have less supply coming out of Russia, which is a major oil producer. It will only lead to higher prices because right now we also see inventory at record low. In the United States, you can see oil inventory at levels not seen since 1983. This is telling us a lot, okay? There is not enough coming into the open market, and every country has been surviving on drawing down their stockpile. So the condition for higher prices is definitely here.
All right. Thank you. So, is there any more question? Is there any more question? Seeing the time, okay. Seeing the time constraint, we can only adapt for one last question. So, the last question will be, basically it's quite similar. It mentioned that can these high prices of crude oil be sustained to 100 barrel level? It will destroy crude oil demand too with high prices. So I believe it's similar. Yeah, back to you.
Okay, my view, this is purely my personal view. I believe we don't have to wait very long to see $100 per barrel. We are almost into the last week of trading for July. Once August comes in, okay, I think the real action will actually manifest. Okay, I am very bullish on crude oil prices. I think a lot of markets is going to react violently in August. Everything is pointing to August. So like I say, we don't have to wait very long. If you ask me whether crude oil prices can sustain above $100 per barrel, I think over the next few weeks in August, we should be able to see that number. Okay, oil prices over the medium to long term is going to be way higher than $100 per barrel, in my opinion.
All right. Thanks. I believe that's all for tonight for our Q&A session. Now, to end our session today, let me share the screen quick one for a while to all of you. All right, so if you're all interested to join our future, I'm interested to know about stock futures or CFD, may scan the QR code here. And this is our contact. You may contact us. All right, that's all from us. Thank you.
Thank you very much. I shall see you guys soon.
Okay, thank you. Thank you. Bye.